Firstly, is Transurban as an investment option?
James, look, certainly looking at those numbers, they did actually look very strong, and as an investment option, we certainly do very much like this stock. They saw some very solid growth across all of their toll roads. Looking at some of those numbers you have mentioned, certainly looking very strong, particularly coming out of Sydney. Those revenues across the Hills M2 were the best, up 15.2%, followed by that Westlink M7 up 11.2%, and of course that Lane Cove Tunnel up about 10.4%. As you say, that City Link toll road over in Melbourne seeing the strongest growth since about June 2013. And also looking at the US, we saw revenues up about 58% or so, and this was also very pleasing given the fact that this has typically been a bit of a weak performer in the past. So all of that certainly pointing to some further strength in the stock. Over 2014 we saw a very solid performance that was up about 27% or so, so really has just been a consistent performer. And looking ahead more in the medium term, I do think they have a very strong pipeline of those growth assets in place. Of course, we know that City Link Tulla widening project over in Victoria is in the pipeline. That's expected to increase capacity by about 30% or so, and obviously that will lead to an increase in tolls and revenues. They have that Legacy Way under construction over in Brisbane, and of course some of those efficiencies still expected to flow from that Queensland acquisition back in April 2014. So certainly expecting that will continue. Those growth projects are in place, and we certainly do like the very solid portfolio of assets that they do have. And of course a lot of that infrastructure spending which has been announced by the government potentially will add to a lot of those domestic opportunities in terms of further acquisition. So as an investment option, very much like it.
Whitehaven Coal, it's delivered some production numbers. Have we seen much of a reaction on market?
James, if we look at that share price, it's actually been a positive reaction. I last looked, it was up about 1.3%. It was up even more earlier, but seeing those production numbers coming through, it was actually down 17%. We saw sales down about 7%, and of course that was a result of some weak output at some of their Australian mines, and of course some of those coal prices, as we know, that have been under pressure. But despite all of that, the company actually said, knowing that coal obviously is one of the cheaper sources of energy, those coal prices have actually held up a little bit better in terms of some of those other resource players. So some positive commentary there. Of course, looking at their Maules Creek mine, back on the 17th of December, they actually announced that this mine started coal railings about 3 months ahead of schedule, and this was a really positive development. It was less than a year after construction actually first started on that mine, so it was a very quick turnaround. In the December quarter, they contributed about 94,000 tonnes to their production. So had that coal railing not started that 3 months ahead of schedule, I think the production numbers today actually would have looked worse. So I think investors certainly reacting quite positively to that. They are expecting that this mine is going to be fully commercial by about July 2015, and expecting about 2.5 million tonnes of coal to be produced over that period. So I certainly think that looks very positive going forward. The outlook, I think, for those coal prices probably still does look very challenging, certainly in the short term, but the company has mentioned that longer term, sort of over the next 12 months or so, certainly expecting to see a bit of an improvement in those coal prices. So again, I think that is probably adding to that positive momentum we're seeing in that share price today.
So wrap it all together for us, and how's it all playing out on the broader market?
Look, James, certainly seeing the market still under a bit of pressure, continuing on from those losses we've seen the previous 2 days. We obviously now have wiped out those gains we saw across 2015. Those negative leads coming from Wall Street obviously having an impact this morning, despite seeing a solid performance across some of those European markets. But over in the US, as we know, we saw a very volatile session. We saw it fluctuating between those gains and losses. So that's been certainly a trend that we've been watching today. Obviously, those oil prices continuing to plunge, and also the World Bank, I think, cutting their growth forecast to 3%, all certainly having a bit of a negative impact. But quite surprisingly, seeing that energy sector performing very strongly despite those oil prices still trading at those 6-year lows. I think investors are certainly starting to find some good buying opportunities at these levels, and potentially a lot of that selling has been overdone. And of course that telco sector, following on from the gains yesterday, we are seeing Telstra up another 1% or So certainly continuing strength in that area. But obviously that materials sector, the worst performer, seeing those commodity prices under pressure. Unfortunately, that positive trade data out of China yesterday didn't provide any respite to the decline in those commodity prices overnight. Copper plunging to those 5-year lows, as you mentioned earlier, certainly adding pressure there. So expecting that potentially this volatility will continue, and we might actually continue to trade at these low levels for the remainder of the day.
Leanne, thanks very much.
Thanks, James.